Thank you for joining us today. Today's topic will be the life of the loan at Mountain West Financial. This topic is important because it will give you a better understanding of how the file will flow throughout the life of the loan here at Mountain West. So let's go ahead and get started. The life of the loan has 14 processes. There are actually 14 processes that must be completed throughout the life of the loan. I'm going to call out each process, however, I will elaborate more about each process throughout the presentation. So let's get started with here, the loan originator. Once the loan is originated, the initial disclosures must be issued by the broker or lender. Once the lender disclosure, the TIL, and the intent to proceed have been executed by the borrower, the appraisal may be ordered. The processor processes the loan file. The loan is submitted to Mountain West Corporate or a regional center. Once submitted, the file enters the data entry department, then to the disclosure department. Then the file moved on to underwriting. Once the file has been underwritten, it goes to the early check LQI process. Once the file is ready for docs, it moves to the RESPA check. Then to the doc department, then to funding, and then to the HUD 1 department, then finally to the post-closing department. So the file actually passes through many departments throughout the life of the loan. Now that you are familiar with all the 14 processes, how does the loan get started? Well, the life of the loan starts with the loan officer. The loan officer takes the loan application. Once the loan officer receives sufficient information from the borrower, a loan application is being completed and the initial disclosures must be issued to the borrower within 3 days of application being taken. Definition of a loan application. The definition of a loan application per RESPA is an application means the submission of a borrower's financial information in anticipation of a credit decision relating to a federal-related mortgage loan. How does the loan officer know when they have a complete application? And at what point is it required that the initial disclosure package be given to the borrower? Well, Mountain West Financial defines a completed application has been taken as soon as the loan officer has received the following 6 items from the borrower. Those items would include the borrower's name, Social Security number for pulling credit, the monthly income, the property address, the loan amount sought, and the estimated value of the property. Although I've only listed 6 items, it's important to mention the importance of taking a full application and verifying that all sections of the application have been completed. The 6 items that I have listed are key components. However, they are not all the information that is needed on the loan application in order to process the loan. Once the loan officer has obtained sufficient information which deems a full application, a full broker disclosure package must be issued to the borrower within 3 days of application being taken. It is crucial that the loan officer signs and dates the initial loan application to help determine if the GFE was issued within the 3-day period. Now, each broker and lender may have a different definition, so please check with your company policy to ensure that you are compliant. Now that we have discussed what constitutes a completed application, let's discuss the initial disclosure timeline according to RESPA. For those that are not familiar with RESPA, RESPA stands for the Real Estate Settlement Procedure Act. And the Act states that the initial disclosures must be provided to all borrowers no later than 3 general business days after receipt of an application. The broker or lender may issue the GFE. Now, Mountain West defines business days as Monday through Friday. However, if your office is open and conducts substantially all of the entity's business function Monday through Saturday, then you must include Saturday as part of your general business day calculation when determining when the GFE must be issued. How does your company define general business days? Does the majority of your staff members of your company work on Saturdays? If the answer is no, most likely it would not meet the definition of an open and conduct substantially all of the entity's business function. Thus, your company probably would not include Saturday as a general business day. Please check with your company policy to confirm if Saturday is or is not included in the 3 general business day rule. RESPA states either the lender or the mortgage broker must provide a GFE no later than 3 business days after a mortgage broker receives either an application or information sufficient to complete an application. Now, if the broker provides the GFE to the borrower, then the lender is responsible for ascertaining whether the GFE has been provided. If the mortgage broker has provided a GFE, the lender is not required to provide an additional GFE. Okay, now, if the broker is to issue the GFE, the following items will be needed. So if the broker is to issue the GFE, the broker will be responsible to issue the GFE to include all federal, state, and government required broker disclosures. The disclosures must be issued within 3 general business days of receipt of information sufficient to complete the application. Or the broker may request for Mountain West to issue the GFE. The loan officer may decide that they want Mountain West to issue the GFE. Once the loan officer has completed a full application, the broker and borrowers must sign and date the loan application. The processor will upload the following items to Mountain West via WebTrack. They'll use the document upload, and then they'll use the Mountain West pre-disclosure request link. They must submit this documentation within 24 hours of the loan officer completing the application. Mountain West offers pre-disclosures to our broker clients. However, there are common questions that many of our clients have regarding Mountain West issuing pre-disclosures. The first question, what is the advantage of a broker ordering pre-disclosures? Well, the answer, Mountain West issues the initial lender's kill and itemization in order to get the MDIA clock ticking. The next question, can the broker issue their own GFE, or does Mountain West have to issue if they are pre-disclosing? The answer, the GFE can be issued by either the broker or Mountain West in order to request pre-disclosures. Now the next question, does Mountain West require different documentation if the broker issues the GFE versus if Mountain West does? The answer, yes. The disclosure request form indicates what is required depending on if the GFE is to be issued by the broker or by Mountain West. Now let's discuss the Mortgage Disclosure Improvement Act, which we call MDIA. Congress enacted the Mortgage Disclosure Improvement Act, which is implemented through Regulation Z and became effective for applications taken on or after July 30th, 2009. The reason the Act was created was to ensure that consumers would receive the good faith estimate and the truth in lending TILA disclosure at the beginning of the application process and to provide sufficient time for consumers to review the disclosures before consummation took place. Now, consummation is defined as when the borrower executes the loan document. The Act states that the lender must issue the initial truth in lending disclosure to the borrower within 3 business days of receipt of the broker application or loan submission. Please note, we are talking about TILA and MDIA, and we're not talking about RESPA or the GFE. Now, MDIA Act also has a 7-day waiting period, which begins once the lender issues the TIL. The borrower must wait 7 business days before the borrower can sign their loan docs, per MDIA. The MDIA rule states no fees may be collected prior to the lender delivering the initial truth in lending disclosure. If the disclosures were mailed, the lender must wait 3 business days before any fees may be collected. Please note, business days is defined differently than calendar days. Remember, general business days is defined as Monday through Friday, when the businesses conduct the majority of its business function, which calendar days has another definition. The only fee that may be collected from the borrower at application is a reasonable credit report fee. Borrowers include members of the borrower's family and friends of the borrower. This slide will help to illustrate these requirements for 2 hypothetical loans. The first example illustrates the MDIA timing requirements when a creditor mails the disclosures. And the second example illustrates the requirements when the creditor delivers them in person. Now, the definition of a creditor in this instance is the lender. But before we begin with the illustration, it is important to understand the definition of business days versus calendar days when we are talking about MDIA rules. Now, general business days is days on which the creditor's office are open to the public for carrying on substantially all of its business functions. Now, the definition of a calendar day is a little bit more precise in the definition, which is all calendar days except Sundays and specified legal holidays. Both definitions are relevant to the early disclosure requirements under MDIA, so it's very important that you understand the differences. Now, Mortgage Disclosure Improvement Act, the MDIA timing requirements. The MDIA contains 4 primary requirements subject to the timing rules. A lender must mail or deliver the TILA disclosures for all dwelling secured mortgage loans subject to the Real Estate Settlement Procedure Act no later than 3 business days. Now, the 3 business days that we're discussing in this sentence is the general definition, which is Monday through Friday. After the day on which the lender receives a consumer's application. In other words, when the broker submits the loan to the lender. If a lender places early disclosures in the mail, the consumer is deemed to receive them 3 calendar days. And in this definition, calendar days, remember, is a precise definition, which is Monday through Saturday after they are mailed. The lender may impose the fee after the end of the 3rd business day. And again, the definition of this business day would be Monday through Friday. The creditor need not rely on this presumption if the consumer actually received the disclosures earlier and signs and returns the signed TIL back to the lender. So in other words, what it's stating is that just because we put them in the mail, we do, if the disclosures are mailed to the broker, or to the borrower, we do send a copy via email to the broker. So the broker may have the opportunity to call the borrower and say, hey borrower, I have your disclosures, I'm going to send them to you, and if you can sign them and return them back to the lender, then your MDIA time frame starts ticking. So that's also a possibility. Now, the lender must deliver the early disclosures or place them in the mail no later than the 7th calendar day, which is the precise definition, which would be Monday through Saturday, before docs are drawn and signed. The 7 business days runs from the date the early disclosures are mailed or delivered in person by the lender. The lender must issue revised TIL disclosures if the annual percentage rate, the APR, and the initial disclosures become inaccurate. Okay, now I'm going to discuss the process and the procedure if a redisclosure is issued and the APR goes up more than an eighth. Many do not understand this process, so I want to make sure that everyone is clear on how this works. If a redisclosure is issued and the redisclosure causes the APR to go up more than an eighth, the disclosure team will send out the TIL redisclosure to the borrower and the broker, and in the body of the email it will state that the APR went up and that they request the borrower to sign the TIL and itemization of amount financed and send back to the disclosure department. Well, the reason why we ask of this is because if the APR goes up, the borrower will have a waiting period before the loan docs can be signed. Sometimes the APR goes up and the file is nowhere close to going to docs. Therefore, the waiting period usually is over by the time the file is ready to go to docs. However, usually the APR goes up just right before the file is released to go to docs for many reasons, like locking the loan, pricing, changing the rate, changing the loan amount, appraised value coming in low or higher. However, if the APR does go up, the disclosures will be sent via email to you and to your borrower. And it's important that you have the borrower sign and return the TIL and itemization back to the lender, because the waiting period starts from the date the borrower signs and dates the disclosures. If the borrower does not sign the redisclosure, then we must wait 6 calendar days before the docs can be drawn and signed. So the benefit of the borrower receiving the information, or the revised TIL, signing it and returning it back to the disclosure department is real crucial. How is ordering pre-disclosures an advantage? Now, the reason for the broker to order pre-disclosures is for a couple of reasons. But the most important reason is so that the appraisal can be ordered. Remember, per RESPA and MDIA rules, that appraisal cannot be ordered until the following has occurred. The borrower receives a GFE from the broker or the lender. Borrower signs and returns the intent to proceed disclosure. Lender issues the truth in lending and lender disclosure. And the second reason is for the clock to start ticking for the MDIA 7-day waiting period. What is the MDIA 7-day waiting period? What does that mean? Well, the lender has to wait 7 business days, which would be Monday through Saturday, from the time they mail or from the time that the borrower electronically consents to the e-disclose on the first set of disclosures issued by the lender. If the broker requests a pre-disclosure, the 7-day waiting period has passed by the time the loan has been submitted to Mountain West. If the broker does not request a pre-disclosure, then the 7-day waiting period starts when the broker submits the full file to Mountain West. Okay, if you're interested in requesting a pre-disclosure, the following documentation will be required to be submitted to Mountain West for pre-disclosures, and you would submit it to the pre-disclosure upload. The following documentation will be required: the initial disclosure request form, fully executed 1003 with the government section completed to include MLO and borrower signature, the initial fee worksheet or itemization of amount financed, the settlement service provider list, if applicable, your credit report page, which shows the FICO scores and factors, the purchase contract and addendums, if applicable and if it's a purchase. And the reason why we ask for the purchase contract and addendum is because if the purchase contract and addendum indicate that an inspection is required, like a termite report or a septic cert, and that is not disclosed up front, then that is not a valid change circumstance to add it later. So that's the reason why we request for your purchase contract to be included. Then a completed signed and dated MLDS form if you're licensed under the DRE. If you're licensed under the DOC, then we'll require the loan broker agreement. We also require that you have a fair lending, an anti-steering, and your broker attestation. And don't forget the borrower's email address to include an email address for all borrowers on the loan transaction. All these items are listed on your initial disclosure request form located on Mountain West's website under Forms and Disclosures. Once again, these items are listed on the initial disclosure request form. Now, what documentation is required if the broker issues the GFE, but also wants to request a pre-disclosure? If the broker issues their own GFE, but would like for the MDIA timeframe to start, they can submit all documentation listed in the previous screen and include the following: copies of all GFEs issued to the borrower, issued by the broker, copies of all change acknowledgement forms issued by the broker, and the executed notice of intent to proceed. So in this particular screen, we're discussing if the broker issued his own GFE, but instead of waiting to submit the file for the MDIA disclosures to be issued by the lender, they can do that prior. They can request for the pre-disclosures to be issued prior to them submitting the loan to Mountain West. Now, is Mountain West required to issue the pre-disclosures? The answer is no. It is not required that the broker submit the necessary documentation in order for Mountain West to issue the lender disclosures prior to the loan being submitted. Most brokers wait until the file is submitted to Mountain West. Once Mountain West receives the full loan package, Mountain West Disclosure Department is responsible to issue the lender disclosures to include that truth in lending and itemization in all state, federal, and government disclosures within 3 days of receipt of the loan package to the borrower, and a copy is also sent to the processor. However, the appraisal cannot be ordered until the lender issues the TIL and the borrower signs and returns it back to the lender. These rules are based on the Mortgage Disclosure Improvement Act, which we call MDIA. Let's discuss the fee timeline and when an appraisal fee may be collected by the borrower if the disclosures were mailed. Now, mail is defined to include email, fax, regular mail, express mail, and by messenger. Now, this timeline is different than the previous timeline of when the GFE had to be issued. The GFE timeline used the definition of a general business day, which did not include Saturdays or Sundays. This timeline is different because this rule uses the definition of a business day to include all calendar days except Sundays and specific federal public holidays. So with that in mind, let's go over the example listed. Example of when the appraisal can be paid for and ordered. Let's state that the initial disclosures were issued by Mountain West, including the till, and they were mailed on Wednesday, April 3rd. Thursday equals day 1, Friday would equal day 2, and Saturday would equal day 3. And then Monday would equal day 4. So payment may be collected from the borrower on Monday, April 8th, 2013, because we must wait 3 whole business days and we do not count the days issued. Also, remember, Mountain West is closed on Saturdays and Sundays, thus the appraisal cannot be ordered until Monday. So basically, it's a 3-day waiting period, but the 3-day waiting period is to the end of the day, so really it's 4 business days. Okay? Reminder, it is not acceptable to obtain the borrower's payment information for the purpose of paying for the appraisal or any other fees, even if it's not processed until the 3rd business day. The appraisal cannot be ordered until the signed notice of intent to proceed is obtained from the borrower and no earlier than the 3rd business day. What does this really mean? What this means is that you cannot ask the borrower to give you their credit card information until the 4th business day. On the 4th business day, you would call your borrower and ask them to go ahead and provide you with the credit card information. Now, before you can order the appraisal, the borrower must have signed and returned the notice of intent to proceed, and the 3-day waiting period must have passed. The waiting period is a full 3 days, and that is why they state, order the appraisal on the 4th day. Now, this scenario is if Mountain West has mailed your disclosures. Now, the timeline is a little different if the disclosures were sent via e-disclose. Now, we just covered the timeline for mail. Now let's talk about e-disclose. If the borrower has an email address, you can request that the disclosures be sent to the borrower via e-disclose. If the borrower opens the email and electronically consents to the email and you're able to obtain the email confirmation to show that the borrower electronically consented, then you may collect the appraisal fee and order the appraisal the same day that you receive the electronic consent confirmation. Now, even though the borrower consented electronically, we still require that the borrower prints out the notice of intent to proceed and the truth in lending and itemization of amount financed. The borrower must sign and return to Mountain West before the appraisal can be ordered. The appraisal department will request for these signed items. This is how the process of e-disclosure works. The initial disclosure package is sent electronically to the borrower on Wednesday. The borrower receives the electronic email, they open it, they consent to the email, and they also print out the initial truth in lending and itemization as well as the intent to proceed. The borrower signs the 3 documents and returns it back to the disclosure department at Mountain West. Once the disclosure department receives the confirmation of receipt of the borrower's electronic consent, along with the 3 required signed disclosures, the disclosure check will enter the disclosure information data to include the dates in data track, and the broker may immediately collect the fee from the appraisal and order the appraisal immediately. So this is the beauty of using e-disclose, because realistically, if the borrower is aware that we're going to be issuing the disclosures and they need to electronically consent and open up their e-disclose, if they can just print and sign the TIL, the itemization, and the intent to proceed and send that back immediately, then you could possibly order that appraisal that same day. Now this is the time to introduce you to Mountain West loan originating systems and platforms used at Mountain West. Now, Galaxy Point is the loan originating system used by the originators and processors here at Mountain West Retail. Conformix is the loan document engine used to issue the disclosures and closing docs. WebTrack is the online loan tracking system that is a web-based interface to DataTrack. Brokers will utilize WebTrack to generate a loan number, order an appraisal, and upload conditions. DataTrack is Mountain West's mortgage management system used to underwrite, draw docs, fund, and ship the loan. For those who would be interested in learning how to order a pre-disclosure, this screen is for you. Now, number one, we're going to enter the Mountain West website and click on Business Partners. So if you go onto our website, you're going to click here where it says Business Partners. Then you're going to scroll at the top of the page and select Forms. So once you click on Business Partners, it will take you to the landing page of our website. Up here at the top, you're going to scroll up here at the top where it says Forms, and then you're going to click on there, and then you're going to scroll down to reach the disclosure folder. So once you click on Forms, it'll bring you to this web page. You're going to scroll down to Disclosures and find the Initial Disclosure Request form. You're going to click on the Initial Disclosure Request form and complete the fillable form and save onto your desktop. Then you're also going to save your fee worksheet from your LOS system onto your desktop. You will also save your Fannie Mae 3.2 file onto your desktop. And then you're going to click on WebTrack link at the top of Mountain West website. So once you save all those items onto your desktop, then you're going to click up here where it says WebTrack. And that can be located on Mountain West's website. The broker client will go to Mountain West website and click on WebTrack. So this is what it looks like, the screen, where you can locate your WebTrack button. Once you click on that, the user will enter their username and password and then click on Sign In. So once you click on the WebTrack, it will take you to the landing page of WebTrack. You're going to log into WebTrack by entering your username and password. If the user does not have a username and password, please contact your production coordinator and they will assist you with obtaining one. File ready to submit. The processor will scan the paper file to themselves and save the test file on their desktop. They'll log into WebTrack. The processor should always update the WebTrack with the most current Fannie Mae 3.2 file. And once the Fannie Mae 3.2 file has been updated in WebTrack, the full file is ready to be uploaded into WebTrack. Now, the reason why I mention this is because sometimes you upload your Fannie Mae 3.2 file and it hasn't fully been processed with the accurate information by your processor. So just before you submit the full file to us, you want to make sure that you have the most current Fannie Mae 3.2 file that has been processed by your processor, and that's the Fannie Mae 3.2 file that you want to submit to Mountain West. Once you are in WebTrack, you will click on your current pipeline, then click on the Upload New Loan or Register New Loan. So you're going to locate your pipeline, then you're going to click on Upload New Loan. Once you do that, this is the landing page, the loan upload landing page. Before you go into WebTrack, please make sure to save the Fannie Mae 3.2 file on your desktop. Once you are in WebTrack, it will be required that you attach the Fannie Mae 3.2 file to the upload link. And this is where you attach it. Right here, right where it says Upload File, you're going to attach your Fannie Mae 3.2 file there. And then you're going to answer the remaining questions and click Submit. So you're going to enter the loan program, your contact name, your email address, and the originating type should either be branch or broker. Then you would hit Submit. The process will only be completed if you are uploading a new loan. Once you have attached the Fannie Mae 3.2 file into WebTrack, you will need to click on Back to Pipeline button to locate the loan. It will also give you a message that says your upload was successfully. Your loan has been added to our pipeline. Thank you for your business. You can view the loan details by clicking on the link below. So once you get confirmation that it has been uploaded successfully, you'll go back over here where it says Back to Pipeline. And this is what it looks like once you hit back to your pipeline. Now if you take a look to the left, you will see the loan number column. Oopsie. So this is your loan number column. You locate your loan number and determine what the assigned loan number was. The loan number will be referenced from here on out. Therefore, it's important to know what your loan number is for your specific loan transaction. File ready to submit for pre-disclosure or full submission. Once the processor is ready to upload for pre-disclosures or for the full loan submission, go back to your pipeline and locate the file. Click on the Document Upload. So you're going to click here on Document Upload. Once you do that, then it will take you to the Loan Document Upload landing page. Okay, so now the file is ready to be submitted to either Redlands Corporate or to your Regional Center for Underwriting. The processor must enter their email address listed under Confirmation 2. By doing this, the processor will obtain a confirmation email that the submission was uploaded successfully. This upload page will be used for everything that you send to corporate or to any of the regional centers. Loan submissions, prior to doc conditions, prior to funding conditions. Please make sure you use the correct link depending on what you are sending. The different links include loan submission, prior to doc conditions, prior to funding conditions. For example, right now I'm explaining how to upload a new loan submission. If you are submitting the loan, you would select the new loan submission upload. Once you select the new loan submission, you would attach the full file to this link. So on this particular example, I have circled the new loan submission. You're going to select and then attach your file here. Now that you have uploaded your loan and attached your Fannie Mae 3.2 file successfully, the file enters our data entry department. Once the loan has been uploaded through WebTrack, the loan will pop up into the data entry queue. The data entry will enter the loan information into DataTrack. For example, the date received, the submitted date, and they will also enter in notes that the file was received, the date and time that it was received. The data entry will review the file in FSOS and index and validate accordingly. The data entry also reviews the file to see if it's complete. If complete, the file proceeds to our underwriting department and workflow, which we call on-base. If incomplete, a file is retained in our data entry department until all missing items are received. The broker's emails regarding file received and progressing to the underwriting department, or file received and items missing. And most likely they'll list the items that are missing. Once missing items are received, the file moves to the disclosure and underwriting department via workflow, and again, our workflow in on-base. Now the data entry completes the following at time of submission. So on a wholesale loan, Mountain West data entry technician will complete once the loan has been submitted to Mountain West. They'll complete the LDP, which is the limited denial of participation, the GSA, which is our excluded parties list system. They'll pull an NMLS on all MLOs. They'll run transcripts. They'll order case assignments. They'll complete refi authorizations on streamlines. They'll run a zip code lookup. They'll run fraud guard. They'll order an SSI form. They'll pull a mortgage credit reject. They'll also pull tax rolls. They'll order a flood surge. And then they also process the SS89 forms. So our data entry actually does a lot of functions before the loan even goes to underwriting. Now, once the file hits the data entry department and those functions are completed, then the file moves on to our disclosure department. The disclosure department will review and validate the disclosure package issued by the broker. If the disclosure department finds an error or discovers a fee was not disclosed correctly, they will notify the broker. Once the file is submitted to Mountain West, all redisclosures are to be issued by Mountain West and not the broker. The broker is responsible for submitting any change circumstance requests that they are aware of within 1 general business days of receipt of the change. So if the broker gets notification by the borrowers or by the agents that something changes and it's going to affect your GFE, please submit your change acknowledgement form to the disclosure department immediately. And you would submit that to changed circumstance at MWFinc.com. File ready to issue disclosures, which we call the MDIA process, begins. Once the processor has submitted the request for pre-disclosures or has submitted the file to Mountain West, Mountain West Disclosure Department will receive either the pre-disclosure request and they will issue the disclosures, or they will receive notification that the full file has been submitted, and they will issue the lender disclosures within the required 3-day period. The loan information will be exported from Point into Conformix. The disclosure package will be issued out of our Conformix system. The borrower will receive the disclosure package either in person, by mail, or via e-disclose. And if they receive it via our e-disclose, that is a secured site. The borrower will either electronically consent and/or sign and return the notice of intent to proceed and the fee acknowledgement form, or sign and return the lender a full disclosure package to include the notice of intent to proceed, the TIL, and itemization. Now, once this process has been completed and the borrower signs and returns the necessary items, the appraisal may be ordered. So now let's discuss file is ready to order the appraisal. The appraisal department will not allow an appraisal to be ordered until all disclosure dates, truth in lending, and APR data have been entered into DataTrack. On a wholesale loan, the disclosure technician will enter that data. The appraisal department will also verify that all required disclosures have been received by Mountain West Disclosure Department. Once the appraisal is ready to be ordered, the broker will log back into WebTrack. And the appraisal will be ordered in WebTrack. File is ready to order the appraisal. So the broker will have to log back into WebTrack and click on Pipeline and find the loan. Once they're in their pipeline and they locate their loan, they're going to click on the loan file and they're going to click on the Order Appraisal button, which is right here. By clicking on the Order Appraisal, it will take you to the appraisal order form. You're going to complete the form and submit. So this is just a sample. Once you were to scroll down the form, it starts asking you questions about the borrower, when they will be available, about the property, and so forth. So you're going to complete the questionnaire, and then once you complete it, you're going to hit Submit. Now, the appraisal payment. You can choose to pay now if you have the credit card information, or you may choose to pay later. If you choose to pay later, you can email the link to complete the payment process to the borrower for their payment. Once payment is made, the appraisal will be ordered. Make sure to print a copy of your confirmation with your appraisal order number. Let's discuss how to lock a loan. The loan will be locked in WebTrack. Click on the View Pricing tab, and complete the screen and submit. Easy as that. Now we are going into the underwriting department. File is delivered to the underwriting queue, and file is assigned to the wholesale underwriter. The underwriter receives the file in their queue. The underwriter underwrites the file and issues a decision. If file approved, file is delivered to the underwriting assistant. If file is canceled or denied, notification is made to the broker for proper notice of action taken to be issued for closeout. We have a condition coordinator, which this person is responsible to collect and confirm once all conditions have been obtained from the broker. So please remember, do not piecemeal your conditions. Please submit all conditions at the same time. If a condition is missing, the file will not be moved forward to the underwriter to review until all conditions have been submitted. Now, the underwriting assistant is responsible for the following. They're responsible for what we call order outs. Order outs consist of ordering enhanced desk review, automated valuation model, corrections to case assignments, corrections to conventional appraisals, prep for MI underwriting submission, prep file for SHDAP submissions. They also order MI quotes, inserts, the underwriter assistant does not review conditions. The underwriter reviews their own conditions. However, the underwriting assistant does complete all of these other functions. Once the underwriter has reviewed and signed up all the prior to doc conditions, the file is routed to an early check queue. The early check process consists of the following. Early check consists of comparing the information listed on the DU, LP, versus what is in DataTrack. A soft credit pool is generated to complete the loan quality initiative, which we call the LQI process. LQI process is comparing the initial credit report versus the new credit report to verify no new debts have been obtained. If file fails LQI, file returns to the underwriter for additional work. If file passes LQI, file moves to the disclosure department for RESPA Check. The LQI process also verifies that all prior to doc conditions have been signed off by the underwriting department. And then they also enter the ready for doc date into DataTrack. Now let's discuss the disclosure department and the RESPA check. The RESPA check was developed when the new GFE came into play back in 2010. This is the last check before docs are drawn to ensure that we are in compliance. RESPA check consists of the following. RESPA check is the final review of the disclosure package and consists of the following. First page of the GFE is checked against information listed in DataTrack. Loan program is the same as submitted, or if changed, that we have a valid change circumstance. The marketing tab is checked against last issue GFE, and they verify that there is 5 days remaining on the lock. They check if the credit for the rate chosen or charged was disclosed correctly on the GFE. They also check the compliance screen in DataTrack to ensure all disclosure information was completed. They check the change circumstance box to ensure no other changes have been requested. They also check the truth in lending APR has not gone up more than an eighth from the last issued till. If the APR has gone up more than an eighth, there will be an additional waiting period before the borrower can sign loan docs. They also check the MDIA 7-day waiting period has passed. And then once RESPA check is complete, the file is moved into the doc queue. Document Assistant Queue. The Document Assistant Queue receives the document order form and confirms ready for docs. Date is input into DataTrack. They verify that the lock has 5 days remaining on the lock. As you are aware, that Mountain West requires for there to be 5 days remaining on the lock. The 5 days does not include Saturdays or Sundays in the calculation. The reason we have this policy in place is because once the docs are drawn, a redisclosed GFE cannot be issued, and if docs are drawn and the lock expires and the borrower is charged an extension fee, that extension fee triggers a redisclosure, which means the current loan docs are no longer valid and a full redraw must take place. And that's the reason why we require that there's 5 days remaining on that log. Now the document drawer. The document drawer reviews the document order form for any special instructions from you, where to send the docs to escrow, if you want them picked up, if you want them emailed, and so forth. They also review the estimated HUD-1 for the breakdown of escrow fees, especially those line 1101 escrow fees. They input the information into DataTrack in our DataTrack screens, and they upload the loan from DataTrack to Conformix, which Conformix is our document drawing system. And then they email the documents to the escrow or to the broker. And they also complete the verbal verification of employment. Now our collateral desk. The collateral desk receives the executed loan documents back from escrow. Once the collateral desk receives them, they check the LDP and GSA on the notary. They also run MERS. They run MERS to check on the borrower to verify no recently recorded deeds of trust that we were not aware of. There have been some times where the borrower is obtaining a second loan on a different property concurrently with our current loan, and they don't think that we're going to find out about it until after the loan transaction is completed. And for those purposes, that's the reason why we check MERS when the loan documents come back. So actually we check MERS in the beginning of the transaction, and then we again at the time of docs, when docs were returned. After she runs the MERS, then she assigns the file to the funder. Now we have reached the funding department. The funder reviews the file for completeness. She or he reviews all the prior doc conditions. This is just a friendly reminder to you all that all funding conditions must be uploaded through WebTrack via the funding condition upload. Do not send them directly to the funder's email address. The funder confirms with escrow that they're ready for funds, and they anticipate the recording date to ensure the pre-dim interest charged to the borrower is correct. Once they have all that confirmed, then they fund the loan. We also have a HUD-1 department. In our HUD-1, we have a HUD-1 specialist. The HUD-1 specialist reviews the final HUD-1 for correctness. If incorrect, the HUD-1 specialist works with escrow and the closing agent for corrections, and then issues approval to escrow for disbursement of borrower funds. If the HUD is correct, the HUD-1 specialist issues approval to escrow for disbursement of borrower funds. Now, the HUD-1 department was created because most often we were finding that once the loan was funded, escrow would make changes to the HUD-1, or they would accidentally give the borrower too much cash back on a no cash out transaction. In order to prevent these types of errors, we decided to create the HUD-1 department. Now let's discuss our post-closing department. Once the file has been funded, the loan is moved to the post-closing queue. The post-closing team is here to assist with the mortgage process by reviewing closed loan files for compliance, completeness, and accuracy. They obtain missing documentation and provide support to our internal and our external customers. Government loans are insured, guaranteed in the post-closing, and this area manages the MERS reporting for the pipeline. The post-closing is responsible for the boarding of loans to our servicing platform or the timely sale of the loans to various investors. This completes the presentation for today. I would like to thank you for joining me, and I hope that you have a better understanding of how the file flows through the organization. Thank you, and have a wonderful day.